I'm Jim Juback, and welcome back to my YouTube channel for Juback'sPicks.com, JubackAssetManagement.com, and now for my new Substack, Economics for Investors. I say welcome back because I've taken a break from my videos for a while I was working on getting Economics for Investors up and running. And now it's up and running. I'm really excited about being able to load these not only on the two sort of legacy sites, but also on the new Substack. Economics for Investors is about trying to get a deep dive into what else? Economics, the economic forces, the long-term economic forces and trends and statistics that really are behind, and in my estimation, more important than the short-term news stories. So we're going to try to take that kind of perspective on that site and more stock picking on the other existing sites. To subscribe to my new Substack, Economics for Investors, go to economicsforinvestors.substack.com. And now we're going to dive right into my video for June 3rd, my deep dive, which is entitled, Is the SpaceX IPO Too Greedy? Now, we all know what the SpaceX IPO is. This is Elon Musk's vertically integrated rocket AI conglomerate going public. Now it looks like maybe on prediction markets are saying June 12th, 75% chance that will be the first day of trading. This is going to be an immense IPO, the biggest offer ever. And the company's looking at raising somewhere around $75 billion. The math says that if they do it, and that's the valuation, Elon Musk is going to make about $750 billion. Okay, a huge amount of money. But what really concerns me, and when I say greedy, I'm not talking about Elon Musk's payday, but the way that he's achieving it. Now, I live in Venice at the moment, and if you were to take a walk down to the Accademia Bridge across the Grand Canal, on many days you would see a game of three-card Monte. And I stop and watch. Three-card Monte, they shuffle cards around. You have to guess which one it is. And if you get the right one, you get paid. And if you don't, they take your money. And this is a very classic game played from anywhere from New York to Venice. And if you look at the crowd, you can see the guy standing there looking to see when the police come, because this is not legal. And you can also see, if you've watched a lot of three-card Monte, and I used to watch a lot of it in Times Square in the old days when Times Square was a little rowdier than it is now, you'd see the guys in the crowd who were put in the crowd to win occasionally to entice people who weren't in on the game to put their money in. So, and as I go by, I sort of look at this and say, oh, okay, I won't play, but I don't mind if other people do. Why they play, I don't know. It doesn't have any appeal to me. But hey, I'm not morally outraged at three-card Monte because I'm not required to play. My problem with the SpaceX IPO is that, well, it's being structured by Elon Musk and his investment backers so that you pretty much have to play. It's a really clever structure. The problem with an IPO that's going to trade at the valuations that SpaceX is going to when it first comes out of the dock is, well, keeping the momentum going. You're putting stock on the market. You want it to go up the next day, not down. You don't want people who bought on the first day to lose money. You want them to make more money so that other people will buy in further down the road. Okay, so they're doing this in a number of different ways. One is that they are putting aside 30% of the offering, a very big sum, big amount of an offering for retail investors, so that people stand a good chance of getting in on the first day of offering. Not beforehand, but If you're lucky, you can get in pretty soon. And Elon Musk has a big cadre of followers. So basically, this is the retail audience that Goldman Sachs and the 23 other investment banks who are handling this offering, this is, as I say, huge, are looking to this up. Okay, but they're not relying just on that. And this is the part of this that I find a little problematic. They have been using their marketing clout, they being SpaceX, has been using its marketing clout to convince index funds and markets like Nasdaq to change the rules so that they can get index funds into this game earlier. Now, normally Nasdaq, which is where this is being listed, requires 90 days to go by before a new stock can get into the Nasdaq 100 or the Nasdaq Composite Index. Well, they've changed the rules. It's now going to be just 15 days. At the end of that, index funds who want to stay up with the index have to buy SpaceX shares. Now, the rules for how much SpaceX you have to buy is pretty complicated because it's not just market cap. These most indexes are market cap weighted. It's not just you buy equal amounts of everybody in the market. You buy dollar amounts that correspond to the dollar amount valuation for that stock and put that into the index. It's not quite that simple. They also have float rules. Basically, you've got a lot of early investors who can't sell immediately. This is not free floating. So an index fund doesn't have to take that into consideration when it adds SpaceX to its index. So you're going to get a lot of buying by indexes. Guess is about $5 billion to put them into the Nasdaq indices. But it's not going to be immediate because you don't have this float. As time goes by, restrictions disappear. People who have restricted stock are free to trade. Usually takes about 6 months for it all to expire. At that point, you are then going to get a larger float, more index buying. At that point, S&P, Dow Jones, S&P hasn't yet decided whether they're going to waive their rules and allow SpaceX into the index and when. But my guess is that we're really looking at something like the restrictions disappearing at about the same time as S&P decides to put it into the index. Again, more momentum going on after the offering. Now, if you want to buy SpaceX, God bless. I'm not a fan of the way that Elon Musk runs companies, but more problematically, I don't think SpaceX works as a technology. If you'd like to follow that topic in more depth, I would suggest going on Substack to a guy named Will Lockett, who does really, really good work on the engineering of the reusable SpaceX spaceship and getting stuff into orbit and how much it's going to work and whether it's anyway. I find his analysis compelling, and it suggests to me that SpaceX is not the greatest thing since sliced bread, and that its reusable technology isn't really reusable to get a lot of satellites into orbit, in which case its cost advantage disappears. Anyway, if you want to buy SpaceX, go ahead. The problem is that if you don't want to buy SpaceX, SpaceX is going to show up in your indexes anyway. It's going to show up in the S&P, it's going to show up in the Nasdaq, and you're looking at maybe $175 billion going into SpaceX shares if the S&P decides to allow it into the 500. You're talking about a very heavy weighting for this. If you are a conservative investor who doesn't want to really manage individual stocks and then buys index funds because that gives you a big diversification in the market, you're going to wind up owning SpaceX anyway. Now, if you want to do this as part of your index Great. You need to recognize that you are going to do this. We've already got a problem in the indexes, which is they're so heavily weighted toward 5, 6, 7 technology stocks that it's not quite clear to me whether you have a diversification in the index anymore, or really just a lot of technology weighting. If you're worried about a technology bubble, this is something to concern you. Anyway, one way you can get around this is think about changing from a market cap weighted index to an equal weighted index. You can still own the S&P and you won't wind up with all the technology, and then add whatever technology you want in terms of individual stocks. But I just think you need to think about it. Now, the problem that I raised when I said SpaceX is too greedy is, well, all of these things are designed to make this offering go, to make this offering work out really well. It's a lot of rule bending for a specific company. And the question I have sort of about the markets as a whole is, how do people feel about that? At what point do people decide, well, the markets aren't really very fair, so I'm not sure I want to play? I don't know anybody who thinks the stock market and the bond market are level playing fields. But we all sort of go, it's a problem, but it's not a big problem, and it's the only game in town, so I'll play. The problem, of course, is that if you get to a situation where people say, it's a problem and I don't want to play, especially in a situation where income inequality in the United States has been growing by leaps and bounds, and not everyone is in the stock market, and the question of people feeling pressed about their economics is on everyone's mind. If you have that, plus the fact that people say, a lot of wealth is being created in the stock market, but it's not available to everyone. Most families don't own any significant amount of stock, so maybe this is really not fair. So I'm not saying that maybe this isn't fair is all comes down on Elon Musk's head. It's not. It's something that's been growing for a long time. But you've got SpaceX. Anthropic just recently announced that they're going to do an IPO. OpenAI, we know, is going to do an IPO. You're going to have these big tech companies doing IPOs, a lot of them, everybody hoping that they're going to be rewarded for that. And my question is really, are we trying to put too much weight on the capital markets at one particular point in time? And is that then going to affect people's attitudes toward the capital markets as a whole? If you want to see more about this, I posted a longer post on the Substack with this title, is the SpaceX IPO Too Greedy? So you can get more details on how this all works. So if you'd like to go to economicsforinvestors.substack.com, you'll see the full story for this, and that will give you more detail on all this for you to think about. And if you've got questions about it, you can, of course, comment on that site if you're a subscriber. If you're a paid subscriber, free subscribers can read part of the story. Paywall, paid subscribers, and we're only talking about $7 a month. You can read the whole thing and also comment and ask questions. Happy to answer them. So thanks for watching. I'm glad to be back on YouTube and hope that you'll subscribe. Thanks very much.